Welcome back. I hope you're having a fantastic day. We are going to take a look at Bitcoin, crypto, and the stock markets today and see what's going on. Coming off of a week that is down in the markets. Markets opened down a little bit. They've bounced back other than the NASDAQ is down 1.35. The S&P is down 0.47. Dow Jones is pretty much flat right now. But they were down a little bit more at the open, and they may pull back in the afternoon. So again, what's important is the momentum into the close, and we'll have to see if the stocks continue to sell off into the close. And again, it's all about the Fed right now. The market is trying to decide whether or not or how seriously it's taking the Fed and their resolve in terms of reining in inflation and getting things back under the control of the Fed. So we'll just have to see how that plays out. The losses have been driven by a change of tone in the Federal Reserve, signaling it will be even more aggressive to fight inflation. On Wednesday, Central Bank released its minutes from the March meeting, revealing that the policymakers plan to reduce their bond holdings by a consensus of $95 billion and to raise interest rates 50 basis points pretty much every meeting moving forward. Some of the Fed members are now saying they're targeting a 3.5% interest rate policy by the end of the year. So we'll have to see if the markets are taking that seriously enough and whether or not the Fed actually follows through, and if they are seriously going to destroy asset prices in order to achieve their goal with inflation. So we'll just have to see. As far as the Bitcoin conference going on this weekend, everybody was anticipating Jack Mallers' announcement yesterday. The anticipation was he was going to announce a partnership with Apple, or that Apple had bought Bitcoin. And of course, basically the announcement kind of fell flat, and it just said that you're going to be able to use Strike to make purchases pretty much anywhere using cryptocurrency, Bitcoin or dollars, and removing the third-party intermediaries, which is a great thing for retailers. And I think that's something that needs to happen. Credit card companies are extremely cost prohibitive and punitive for vendors, businesses, anybody who takes credit cards in your business. You know, those fees add up, and it needs to be eliminated. They're charging customers to use the credit cards if they finance the transactions and don't pay them off, obviously. So the credit card companies, the fees to the merchants need to stop. And I think the industry is changing. It's going to change. So I think that was a great thing. But as far as the anticipation of some big announcement, kind of fell flat, and the market has reacted accordingly. Bitcoin is obviously down on the day today, got a little bounce here at the moment, but we'll take a look at the Bitcoin charts in a minute. And then, of course, the other big thing that came out of the Bitcoin conference was Peter Thiel calling Warren Buffett a sociopathic grandpa from Omaha and Bitcoin's enemy number one. So Peter Thiel went on quite a rant yesterday and put up all kinds of pictures and images with like Buffett's picture with rat poison on it. And he went after Jamie Dimon and of JP Morgan, and also he went after BlackRock and Larry Fink from BlackRock in terms of their position on cryptocurrency and Bitcoin. He says when they choose not to allocate to Bitcoin, that's a deeply political choice, said Thiel. He said, when we need to say that you have to get on board with this, basically saying anybody who is not on board with Bitcoin is kind of, against it. And he said, what they need is they have to fight for Bitcoin to go from 10x to 100x from here. So really interesting words from Peter Thiel, attacking these guys, calling them a gerontocracy, and that his view was that they're all part of the New York banker bias. So he came out strong, hot and heavy against Wall Street, against Warren Buffett, JP Morgan, and BlackRock, basically just attacking them because of their stance on Bitcoin. So that's one way to try to bring more adoption in the space. So he was saying that to get Bitcoin from 10x to 100x from here, you need institutional adoption, you need broad scale adoption. What you don't need is people like Peter Thiel attacking people that don't understand Bitcoin or don't support Bitcoin. What you need is to be able to intelligently explain Bitcoin to people that don't understand or that have not engaged in the space yet. And you need more people like that versus extremists coming out just attacking anybody who does not understand it or has not taken the plunge yet. So very interesting perspective from somebody who is attacking someone who is 10 times his net worth. I think Peter Thiel's net worth is about 10 times less than Warren Buffett. So interesting strategy there. We'll see how that all shakes out at the end of the day. But anyways, that's what's going on at the Bitcoin conference. And, just like last year, Bitcoin's been down since the beginning of the conference, had a little bit of a drop this morning. This is Bitcoin on the hourly. It's bouncing back a little bit right now. So we'll just have to see what this looks like. And most of the altcoins are following suit, especially the large caps, pretty much almost the same exact price action across the board over the last few days with the altcoins and Bitcoin. So a lot of algorithmic trading going on here. These are all algorithms, and automated trading is basically where the space is. And as more institutions get involved and set up shop like JP Morgan, Goldman Sachs, Bank of America, Wells Fargo, Morgan Stanley, all of these companies are setting up crypto and Bitcoin trading desks so that they can help their clients get exposure to the space. And what those will be, the way they make their money is on trading, moving in and out. So they're not hodling. They're not going to buy and hold forever. That's not what their clients are looking for. They're not looking for custody. They're looking for exposure to the volatility and trading, which is where the money is made in the institutional space. It's made on moves. It's made on assets under management, getting in, getting out, and they make their money when their clients move their money in and out and make their money. So different perspective than a Kathy Wood, who is, yesterday at the conference, she said that Bitcoin was still going to hit $1 million, trying to find where Kathy's, where her little snippet is from yesterday. But anyways, there's an interview with Kathy Wood. She still maintains that Bitcoin's going to hit $1 million per Bitcoin. So she has a different view than a lot of the other investment banks that are looking for trading action. So again, here's what we've been following is this trend line here, and that Bitcoin has kind of been in this range, and we saw some pressure on price here last couple of days. So again, this is the bottom of the range. And like we said, if it does come down and test this area, it's going to be around potentially 30, depending on when it happens, 37, 38,000. The further out it goes, the higher it will be, 39,000. And we'll have to see if it bounces there or breaks through and goes to test lower ranges. And then of course, the top of the range here, Bitcoin did have a little bit of a breakout that failed on the top range that we've been tracking on the daily closes there. So Bitcoin broke up, tested. And again, that's what we looked at. If you look at, the videos I've been making the past couple of weeks, again, I'm not a technical analyst. I use these just to make, decisions of when I'm going to get in and get out, support and resistance ranges. But we were looking for Bitcoin to test this area, come back, retest, and either continue on from there or break down. So if it breaks down, generally the idea is it'll test this lower range and look for the same thing, see if we get a bounce or if it'll break down from there. And if it breaks down, then you could expect it to test these lower $30,000 levels to see if that's going to support. And and it looks like Bitcoin wants to test those lower ranges again. So we'll just have to see what happens. And you'll get these bounces in and out before they roll. But right now, Bitcoin's put in just a higher low. So you had your low here that we called back in January at 36,000, which that's right at 35.1. So that was the bottom there so far. Everything's been a lower high ever since. This is just another higher low. This is just another higher low. And then you have your lower high of the range here, which the only thing that was concerning at that point was it was putting in lower highs still. And then it finally put in a lower higher low right there, or a lower higher, lower high basically on the whole trend here. A higher lower high, I guess is what I was looking for, where this is a lower low, higher lower low here, trying to reverse that trend. So we'll have to see if it comes down and bounces off of there. A couple other things to look at. are the moving averages. And unfortunately, Bitcoin is below. We're looking at the major moving averages here. Bitcoin now is back below the 100-day moving average, obviously the 200, the 100, and approaching the 50-day. When you look at it on a weekly, it has lost the 50-week moving average and the 100-week. So right now, Bitcoin is below those two moving averages. And this is the big one that we've been looking at, is whenever Bitcoin flirts with that 50-week and 100-week moving average and loses it, it generally goes down, well, always goes down and tests that 200-week moving average. And depending on when that happens, you see where the price is, where that could potentially come in at. The longer it takes, obviously, the higher this price could be. And, that rolls over into that $25,000 range, depending on how price moves. And you can see right here, right before the pandemic, when Bitcoin lost the 100-week moving average, it played with the 50-week, came up, broke out, and lost it, went down. Of course, that was the pandemic. So a little different situation there. But if you go back to what I've been looking at, that 2017 peak of the cycle where Bitcoin lost the 50-week, came back, tested it, and then rolled back over to a deeper capitulation and touched that 200-week. That's kind of similar to where we're at now, where price kind of flirted with the 50-week, lost it, came back, tested it again, and lost it. Never really broke out for any significant amount of time above it. Kind of like here, it just rejected flat, broke above it here before that, and then rejected flat, went down. So it seems like this area here is very similar to where we're at right now in the price cycle. So we'll just have to wait and see how that plays out, and where the, if Bitcoin cannot reclaim the 50, then it looks like it wants to go down and test that 100, which again is going to be around that $28,000 to $30,000 level, which is the major macro structure of the low. So we'll have to see if price gets down there and test it. Gaussian channel, once again, the idea is to stay above the midline of the Gaussian channel. Once you lose it, you go down and test the bottom of the Gaussian channel. Pretty much every time Bitcoin has lost that level, when it's played with it, it's gone down and tested the lower level and even gone below it. And again, here's that area. So the question is, now that Bitcoin has pretty much repeated this, where it broke out above the Gaussian channel and then lost it and then went down from there, that's a pretty significant drop from the time it lost the Gaussian channel to the bottom. That's about a 55% drop. So if Bitcoin were to repeat that here, 55% would take it down to around 19,000. So not sure if you'll see that this go around. The last time Bitcoin kind of repeated that, I think it was the same thing back in 2014, and Bitcoin dropped 63%. So big areas to watch there on the Gaussian channel. And then, of course, the last thing is the bull market support band. And right now, Bitcoin is back below it. Briefly popped up above the bull market support band. It's now back below it right now. And anytime that has occurred, obviously the downside, and we'll go back to that 2017, 2018, where Bitcoin kind of popped up above it and then went down below it. And again, that drop from that point was 57%. So it seems to me that this little area here is kind of what Bitcoin is experiencing right here. It's a little different because this was rising. It did bounce at this level here, but it was trending down until this bounce, which back in here, price was trending down until this bounce. So that's the kind of area that I think that Bitcoin could potentially be stuck in right now. So we'll just have to see what happens. And of course, if any kind of a major announcement is made at the Bitcoin conference, a major country adopting Bitcoin or something like that, something more significant coming out, you'll probably see a little bounce in Bitcoin and crypto on the news. But right now, there hasn't been anything to move the markets. And then again, the last conference was over in this area in June of last year, and Bitcoin sustained a 29% drop during the conference last year. So far, Bitcoin is down 8%. If it dropped, 20%, that puts it back down in that $35,000, $36,000 range through the rest of the weekend. So we'll just have to keep an eye on it and see what happens. And again, watch the markets into the close today. The momentum in the close will give you a good indication of what the markets are thinking. Right now, markets are still taking risk off the table. Bitcoin and crypto are risk assets, just like the markets. They're tied in with the markets. If we take a look at the Dow and what's been going on there. We'll look at the daily, still working its downtrend, putting in lower highs. NASDAQ, same thing, kind of unwinding this relief rally that we saw here in the last few weeks. All indices, the dollar is working its way up. Oil is down right now. Silver, a little bounce. Gold, little bounce. So really, it's all about the risk-off trade right now with the Fed and their plan to fight inflation. And inflation is getting worse. Food prices are through the roof. Lumber is still through the roof. The housing market is facing a correction with rising interest rates. That's the other big piece of news to keep an eye on. We're starting to see discounts. We're starting to see sellers have to reduce their prices. We're starting to see days on markets go up in some areas, and we're starting to see more inventory hit the market. So we'll have to see. The longer this goes, the higher the rates get, the more of a correction we're going to see in commercial and residential real estate. So it's just beginning right now. So we just kind of have to keep our eyes on it and watch for the opportunities. So again, this is all, headline risk right now. It's all inflationary risk. And again, the war in Ukraine is a big thing that investors and people are watching. And if we get escalation there, you'll get a knee-jerk reaction from the markets until there's an understanding of what the level of escalation is, and then markets can level off from there. So with that, I want to wish you a good weekend, and I will see you on the next video.